So the improvement about yesterday and the lessons that I can learn from yesterday's two loss was that I know that daily was bearish and 4 hour was bearish. Okay, and but like 1 hour is, as you can see, this line is, it represents the 1 hourly break of structure to the upside. And yeah, but like I wanting to be bullish, but Tuesday was an expansion lower, and I was expecting expansion lower. But the one thing is that for the whole day we were accumulating this low resistance liquidity run. Okay, so all of these are low resistance liquidity run can be wiped out by one little move to the downside. Okay, like one big move. Okay, and the reason why I was bullish is that we already hit 79% of the weekly range, which is discount, and we have these two equal highs with a Thursday's high and Monday's high, and we have a huge ass daily Ferrari gap. So, but like the bias, the bearish SMT was still working, and on ES we already hit this daily bearish Ferrari gap. On Nasdaq we didn't. Okay, so like ES, Nasdaq made a lower high, ES made a higher high, which is a bearish SMT. So, and plus, despite the yesterday's bearish SMT still working, there was another BPR. Okay, I mean sorry, another SMT. We already swept out this high on ES. As you can see, this is the high that 110, and this one is 110, and then we swept it and then just dropped. So that's a bearish SMT. And I should have like realized that I should have like work on my perspicacity and work on my identifying market conditions, adapting to market conditions even more. And I just have to learn to more to adapt, and I have to learn to fundamentals. Like if I had learned the fundamentals, I could have caught this move like for sure to the downside from this high to the low. Okay, I could have caught that. And yeah, that's pretty much it. Like don't try to against the flow of the ocean. There was a 5 minute silver bullet Ferrari gap. Don't try to buy against it. And I'm like, what is this optimal trade entry, bro? Like I was knowing that this Fibonacci placement is wrong, but like I just did it. Like why this hourly, all that hourly bullish Ferrari gap will work? No, it's not gonna work. But it's just dump lower. And yeah, so recognize it beforehand. On ES we're pushing up higher. So how I could have performed better? So let me see. So I know the exact feeling that I had yesterday, which was on the losing trades, that could have been a winning trade if I had waited a little bit more. Is this one okay? So we did a bullish BPR to the upside and price retraced back to it, and a little bit in profit. And I entered off of like bullish BPR. There was no break of structure. So break of structure and Ferrari gap is way better confluences than just a naked balanced price range. So price retreats back to the balanced price range and like one little candle to the upside in my favor. So I entered off of, and then price immediately got me in drawdown. So this is the trade that I could have taken. Okay, so analyze it. Okay, recognize conviction, recognize trading opportunities that could make you bread. Okay, see it. Okay, this is the perfect trade. Okay, bearish. Okay, price inverse this bullish for why you have like did a bearish balance price range, price retreats to it, and then break of structure. Okay, entry. So why I entered short here? Because The bullish entry criteria and confluence is exactly the same as this one, right? But if like the bullish confluence didn't work, why not the bearish confluence? Like this is good, right? Like bearish BPR, retracement to it, push lower. Yeah. On the second trade that I took was wrong because I traded against my bearish trend, and yeah, we have these equal lows, these lows, these lows, these lows, but like like on ES, price was going to this low, like this low and this low was equal, so ES was going for that shit. So yeah, just let recognize conviction, such as in this example, like just trade with the flow, bro. Don't trade against the buy, like when we're fucking selling off. Don't do that. It's not gonna work on indices. So this is the trade example too, like bullish BPR, reactions off of it, entry. But after that, guess what? Breakup structure, inverse this for a while, gap, retrace back to it, breakup structure, retracing back to BPR, and for a while, gap bearish and dropped. Okay. I took the opportunity on this trade, bro. On ES, I took the opportunity on this trade, and yeah, which is right here. So hourly, all that's 1 hour for light gap. I don't care about that anymore. I don't acknowledge them anymore again. Like that's all I want new for light gaps. Okay, and price retrace back to 10 to 11 silver bullet for light gap, and yeah, in a 1 minute time frame, like bullet for light gap, push higher, no breakup structure, no inversion gap, no BPR type shit. And this is kind of BPR though, like, but buy, sell, buy, sell, buy, sell. And then like price just break of structure, but and did a bearish balanced price range. Price reaches back to the bearish balanced price range plus bearish for Y gap, then dropped. Okay, so like recognize conviction. Oh, and the one improvement was that like it's about like how much you lose and how much you win. In other words, like how less you lose and how more you win. Okay, so if I let my winners run, I should have caught potentially 1 to 15, bro. Okay, but it is what it is. There's nothing more greedy about it. But like logically, if price gonna drop, these are the potential trades. These lows, these trend line liquidities, these are the trend line shit, bro. These lows, this is the Friday opening gap in previous week, and these low can be. So yeah, take profit one, I took full profit at here, and TP2 can be hit, and TP3 can be hit, and TP4 can be hit. Okay, so the improvement was that follow your high time frame bias and follow your gut, and sometimes, and if you think you're not supposed to do it, just don't do it, and let your winners run, cut your losers lose cut your losers in like secured in small losses, and let your winners run, and let your winners eat your losses. Okay, so that's the lesson that I can learn from it.